To attain knowledge, add things every day. To attain wisdom, subtract things every day. Lao Tzu. This is a quote by Lao Tzu, an ancient Chinese philosopher. I want to discuss a podcast between Lydie Klotz and Sean Carroll about the concept of subtraction in terms of when we do things in general, people, when we do things, humans, we always try to add things. We always try to build upon other things versus it absolutely can make sense sometimes to instead of adding things, subtracting things. This is a concept that we at Orange Capital Partners, for example, strongly believe in when it comes to risk management. The less positions we have, the less risk we take, because the less there is the delta between what we know and what's really happening. We also believe that, let's say, in terms of following news, the less news you follow, the better you actually are at following the news, because you're forced to actually pay attention to what kind of news you want to look at. So in general, we believe in this concept, but there's also situations where it doesn't work, where I think, for example, when you're building an innovation stack, by definition, we want to keep adding things to a stack. It's called an innovation stack in that sense, that you want to be adding things. So I want to discuss this topic based on this podcast between Sean Carroll and Lydie Klotz about subtracting as a mental exercise. This is a Not Even Wrong podcast. It's August 30th, 2021. This is Crimdelco. For the day, the fund is up 75 basis points. The market is up 40 basis points. For the year, we're up 10.3%. The market's up 20.6%. We're underperforming by 10.3%. Today's main performer in the portfolio was Tesla, and we lost some money on the biotech index, in particular Caribou and Intelia. And for the year, we're still up about 9% on the biotech side, about 3% on the Tesla side, and then we lost some money on other positions. So let's get into this conversation between Sean Carroll and Lydie Klotz. It's about subtracting, and I don't want to go too much into detail here about this particular topic. He's an engineer, he's an architect, he's a designer. So he comes at this from the perspective of how can we make things better, and the answer sometimes is to add things, and the answer very often is to subtract things. This is in general where he comes from. So we have, for example, minimal design is the concept of subtracting things. So you have a structure, a building that has to serve a certain purpose, and then you start subtracting from that structure. Michelangelo used to start with a big bulky piece of marble, and then and then chip down things like the statue of David. So in that sense, I think it's an interesting concept. The question in general is, okay, are we adding things? Are we subtracting things? Why is this even a question? And I think fundamentally, there, Lydie is alluding to the fact that we have this innate, this innate behavioral bias to keep adding things. That's what he's alluding to. So we want to keep adding things, even though maybe sometimes it would be better to subtract things. We can see that in many situations. For example, on Wall Street, it's a very typical situation on Wall Street where, let's say, Wall Street firms, analysts, investors, fund managers, they always keep adding things. They write longer reports, they add more information, they add more arguments. They are trying to signal, and this is something Lydie alludes to also in the conversation, that maybe adding things signals an ability to interact with the world. In other words, being busy is a good thing. So if you're busy, you're signaling to your clients that you know what you're doing, and that's a good thing. So we at Orange Capital Partners have been exposed to that. We've worked on Wall Street. We've seen this from the inside. And when we started the fund, we wanted to think about this a little bit differently. The purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. So I want to go straight into this particular dynamic where, as a fund manager, sometimes you're better off subtracting. Sometimes you're better off doing less. Sometimes you're better off chipping off something from the marble instead of adding things. Like I said in the prelude, for example, news is one of the things where we're very religious about news. I once actually had a rule where I said to myself, I'm not going to spend more than 20 minutes per day following news professionally. So that means that if I want to read about gossip or sports news, that's fine, that's entertainment. But professionally, I'm not going to be lured into this false illusion of having control, understanding what's going on, and just reading news all day long, because it doesn't work. If I force myself to actually follow the news in a very limited amount of time, I'm also going to be very good at finding the right news. So that this is one of the examples. I think risk management, I mentioned, there is a fallacy in risk management, I think, coming from a very good paper that started with Harry Markowitz, University of Chicago, I think in the 1950s. And it was about the efficient frontier. It was about the concept of if you add a certain amount of stocks into your portfolio, you have an optimal amount of volatility and return. That's true. It's probably better to have more than one stock, and it's probably not worth having 100 stocks. That's what Markowitz said. So there is this concept of efficient frontier, but I think it was not misinterpreted. I think it was kind of led astray through this innate tendency of humans to keep adding things, which is basically what I'm saying is if you look at any kind of fund or Wall Street firm or anything like that today, they all have 100, 200, 300 positions. Venture capital firms, they have 100 positions. And there's two ways to look at this. One is the famous throw shit at the wall and hope something sticks. And the other is actually explained with this Leidy Klotz type concept, where we just keep adding things because we're insecure. We don't know how to deal with complexity. Complexity in terms of fund management means we don't know exactly how to achieve returns. There's too much information outside, so we keep adding, hoping that we can, by adding, somehow overcome the complexity, when in reality, and now this goes back to Lao Tzu, it would be a lot more beneficial to subtract, to find the ideal stocks. And we at Orange Capital Partners have tried to do that, and this goes back to yesterday's episode, where we try to explain that the process of investing, the aim of investing for us is wealth generation, and we can achieve wealth generation by having techniques and explanations for how wealth is generated that are outside of the realm of wealth generation, that are outside of the outcome. And we use a principle stack based on 4 books, and then from there we build sort of from first principles a concept, and then we start adding stocks that fit to that concept. So we are, of course, adding stocks. I mean, you have to invest to make money, but we are very, very religious about how many stocks we add. And we are as happy to subtract, i.e. sell stocks out of the portfolio, replace them, as we are to add them. And we don't have a certain hard number of, let's say, we need to have at least 20 stocks in the portfolio. None of that. We used to have 3 stocks at some point. Now we have more than that. It is not, there's no hard number. It depends on what comes out of the principal stack. So the principal stack is the driving force of decision making, and the portfolio is the result of what comes out of the principal stack. So this is something that is very near and dear to our heart. And why we humans try to add things all the time, this is what Leidy Klotz kind of alludes to in his paper and this discussion with John Carroll. It could be evolutionary biology, where we try to show off and try to be busy and all that. The typical New Yorker is always on the phone, even though half the time he doesn't talk to anybody. That kind of thing. It could be that we have an inert incapability of dealing with complexity. So by adding information, we're almost obscuring our ignorance. That's a possibility. But again, I think like clean Scandinavian design or any of those things where you have cleanliness and structure and clarity, also subtracting when it comes to the theory and explanation of how you generate wealth, can add a lot of value and make you feel good and make you successful. Now, to end this episode, I want to sort of use another argument where it goes sort of orthogonal to the concept of subtracting, and that is the argument of building an innovation stack. Now, this is something where we actually keep adding. By definition, Jim McKelvey in his book says an innovation stack is where you start with a problem, you solve the problem, you create new problems, you solve those problems, and you keep going. So how is this now a good thing when we just said that subtracting, when Lao Tzu said, in order to gain wisdom, you should subtract something every day? How does this compare? And I think I want to bring in David Deutsch here, Karl Popper, David Deutsch. And the explanation is the following. By creating problems within the context of an innovation stack, we are trying to create, to solve problems and then find better problems to solve. This is really what an innovation stack is. So the innovation stack is not indiscriminate adding of problems. It is the pursuit of adding better problems to solve them. So in other words, let's say Tesla solved the problem of range with using lithium-ion batteries. And then they solved the problem of charging by building a supercharging network. Then they solved the problem of using photovoltaic cells to fuel the supercharging networks. Then they solved the problem, or in the process of solving the problem of self-driving, because that way the efficiency of the car can be improved, and therefore the transition towards sustainable energy can be accelerated. So the step-by-step the step-by-step creation of new problems and then the subsequent solutions are always better. Better in a sense that they lead towards a goal. They lead towards a goal, in this case, the acceleration of going away from fossil fuels. So in that sense, I think the innovation stack is not orthogonal to the concept of subtraction. It's just something else. It's a different problem. It's a different type of discussion that we're having, because we're not adding complexity. In fact, we're reducing complexity by finding better problems to solve in pursuit of a larger goal, which in itself hides a lot of complexity. So in other words, if your goal is, let's take SpaceX, okay? If your goal is to go to Mars, that's a very complex problem. But you can reduce that problem, in fact, subtract complexity from the problem by solving better and better problems of building a ship that can take you there, Starship, and then maybe building robots that can go there and start building a civilization before the first humans come. So you can reduce the complexity by solving better and better problems for building an innovation stack. If you want to solve the problem of cancer, which is a very complex problem, maybe you should go back and define the problem, which is how can we digitize life science. We have CRISPR, which helps us write and read genomes. From there, we can use computation to solve problems within the context of finding a better medicine, and hopefully at some point, medicines that cure cancer or at least make it a chronic disease. So in that sense, we believe that having an innovation stack, adding better problems and then solving them, is actually the same as is a reductionist process within the context of reducing the complexity of the end goal. And therefore, we believe it fits very well into our concept of reducing complexity or reducing entropy in that sense. Also, I've used that once in my bio, in order to achieve our goals, in our case, generate wealth by investing in fundamentally new concepts and engineering practices with large impact. Thank you.